in this video, I'll share with you 3 common misconceptions that hold back trading beginners and how you can counter each of them so that you can also become a successful professional trader. When I got started in trading way back in 2013, I felt very overwhelmed by everything that I needed to learn. One, I needed to learn about entry strategies. I found that there are various kinds of indicators that one can use. You can use Fibonacci's, stochastic indicator, the RSI indicator, the MACD indicator, and many other indicators. On top of that, there were dozens, if not hundreds, of candlestick patterns that I needed to also learn so that then I can be able to find the best times to be able to buy and sell. Then I told myself, so entry strategies are what are important, I'm going to learn them. But then after learning entry strategies, I learned there is still more. You need to learn about how to place the right stop loss placement, how to place the right take profit price, right? How to place the right support and resistance levels, and then how to be able to identify the trend of a market. So that must have been it after that. Entry strategies and right stop loss placements, and then that must be all that you needed. Unfortunately, that was not enough. On top of that, I learned that there's something called trading psychology. That is how to think like a professional trader. I needed to do that. So I learned all that. That must have been enough for you to be able to learn how to become a professional trader. Unfortunately, on top of all that, there was still something very, very important that I needed to learn along the way. That was discipline. That is, I needed to learn how to be able to implement the strategies that I have learned with discipline. Man, trading is just too complicated. While trading does have a learning curve, it is not as complicated as most people think. With the right education that you can really be able to find online, you can be able to master these basics of trading and start your journey of actually becoming a professional trader. The next misconception that I had and trading beginners usually have when they get into trading is risky and I'm not a risk taker. I don't think I can be able to do trading. Personally, I'm a risk-averse person. What I really like, I like savings accounts, money markets, bonds. So because I know my money is secure and I won't lose anything. So the thought of trading and putting in trades felt very risky. But then what I got to learn along the way is that every form of investment actually has a degree of risk. So like for example, I once invested in a money market fund that actually invests in like things like treasury bills, treasury bonds, and that investment company was one of the best investment companies right at that particular moment here in Kenya. After investing in them for about 2 years, they actually found out to be actually committing fraud. I lost access to my money for about 3 years. And even after I got access to the money, I didn't get all of it. So even in the safe investment, there's always a degree of risk. But then what I learned is that with trading, you can actually be able to learn risk management techniques to be able to reduce the risk of actually blowing up your money in the market. So some of these things are using stop losses. You can also diversify your trading strategies. So if you have, instead of just using one trading strategy, if you have like a couple of them, like let's say 3 or 4, whenever one is not doing well, then you can be able to switch to this other trading strategy and then still be able to manage your risk well and not always be losing. The other thing you can be able to do is diversify the number of assets that you're actually trading. So when you have a balance of different kinds of assets that you are trading, then you can be able to benefit from the ups and downs of different kinds of markets and limit your overall risk in trading. Okay, that's good and all, but what about hold that thought? Before we look into the third misconception that holds back traders, I'd like to give you access to my free online training on the 7 steps to financial freedom through trading. It is an amazing training that will give you a solid step-by-step plan on how you can actually be able to start trading for a living. You'll find the link to access this training on the pinned comment of this video. Let's get back to the third one. So I don't have a lot of money, and I hear trading really needs a lot of money to be able to be successful. Like Warren Buffett, you see them, they have a lot of money. I can't be able to be a trader with just my little money that I have. So I was in the same position way back in 2013 when I was starting. I'm a risk-averse person, and during that particular time, when I got introduced into trading, I was like 3 years into my banking career. I used to work at a bank, and at that moment, I was earning about $600 per month. So I only have $600 per month, so I didn't have a lot of capital to be able to invest into trading. So what did I do? I actually started my trading career trading with only $50 because that's what I could afford to risk in the markets. And unfortunately, like many other stories of new traders, I actually lost that money, I think, within the first 2 weeks. And then I deposited another $50, lost it again. So what then was the solution, and how did I get up to this particular moment? So the good thing with many brokers that are actually out there, you can actually start to trade with the $0. And you had that right, with $0. Most good brokers will actually give you what is called a virtual account or a demo account. And so what that means is that you can learn trading strategies online, and then instead of even risking your own money, without even depositing any money, open your trading account and start practicing your trading skill using the virtual account, so that whatever you lose, you actually lose with the play money. So you can perfect your skill, and then later on, when you are confident, then you can transition into trading with real money and depositing money into your account. So you don't need to start with a large amount of money. And even as you prove yourself with a good track record, then you can be able to translate that and show that to potential investors and get even money to trade on other people's behalf. So having little capital should not limit your dreams of actually trading for a living. But to learn the critical steps that are required, then you need to check out the free training that I earlier shared on the 7 steps to financial freedom through trading. The link is on the pinned comment of this particular video, and kickstart your trading career the right way.